What's up, even Icon traders? January 6th, morning of 10 o'clock. And we've got some stuff developing today. We had some good job numbers come in, and the market seemed to like it. The early morning action was kind of weird. So the futures opened up really high, but the bears were hungry this morning, so they ate all of that up. And I guess they got full pretty quickly. We bounced again off of this level, and I had a request to discuss what this was, and also these green and red areas right here, which I will, but I'm going to talk about this first. So we've got some good trades developing. I actually missed the first one because I just wasn't sure at the time that this was going to hold, and we didn't have any clarity on the stochastics down here. So I could have taken this put spread down here, but I just wanted to wait for clarity on here. But looks like we've got a call spread developing. I looked already, and there's trades at this current time above R3, which is this third green line right here on the pivot points. And I love trading above R3 and below S3. Love those positions. I will take those positions even if other signals are not clear. So I've got it already queued up to take that trade, but I want to see if I can wait to see what these candles do, to see if we retest this high right here, because it looks like it's on the way to do so. So I want this to look exhausted first, so I can kind of squeeze out all of the water out of the rag here. And then I'm going to definitely take this call spread up here. I think it's around 3,900. We're unlikely to get to 3,900 today. And that is, well, I'll have to recheck at the time, but should be around 2 times the expected move for today. I think the expected move is like $23 or something like that right now. So we want to be about 45, 50 points above, which we can do this early. So we've got that developing. So this is pre-trade. Just wanted to show you that. Also, it'd be nice if we can get this stochastic into the black at least. So just waiting for this to kind of fully develop before I take this call spread up here. It's probably going to be for like 15 cents or something like that. Possibly 20, but probably around 15, I would imagine. And that's just fine with me, because I think I can also get in a put, because the market, I think, is going to sell off any highs right now, because a lot of people believe that we have a recession coming. So they're definitely going to sell off strength at every opportunity, I think. So again, waiting for this to develop. While that's going, where is this line coming from? This line is coming from the lows in 2022 in October. Let me back out the chart and we'll see. So this low right here was put in October 13th of 2022. This is the absolute market low of 2022. And all I did was draw a line from that low to the next low, which at the time was right here, and continued that line on forward into the future. And it's held since. It got tested here, got tested here, got tested the other day, got tested today. This line has turned out to be the Alamo. Before, this line was actually a lot steeper, probably going up this direction where it held. The former line held probably here and here and here and here until it got breached on this series of days right here. So this line, it's very strong, but it's getting tested a lot. So that's where this blue line is coming from. And it's also formed a pennant pattern or a flag pattern, whatever you want to call it. So what's going to happen is the market's going to have to make a decision of whether it wants to continue up or if it wants to continue down before we reach, or as we reach February 13th. So by February 13th, we will know what the market wants to do. Because we've got this long-term downward pattern coming to meet the upward pattern that we established from that October low. And this line is even older. And the older the line, the more respect that I give it. So this line goes all the way back to the first days of 2022 when the market started to fall. And we've banged our head against it a couple of times, right here. So we've got both of those lines meeting in February, and the market's going to have to decide. It's either going to go up or it's going to go down. So that's where that's coming from. And as far as the red and green patterns, these are what I use to indicate my profit and loss areas for my trades. I just started doing that in the last day or two. So basically what you've got 3 pieces of information. You've got when I placed the trade, which is where the area starts. So this particular trade I placed at 12:05 on the 5th, and it was a put spread because it's below the market. This where the red and green area meets, that's where my trade was placed. So this was a 37.70 put spread, and what this indicates is below 37.70 I start taking losses. Above 37.70 I am in profitability. And the same thing on the opposite side for the call spreads. This particular call spread I placed right here, which is 2 o'clock or 1400 military time on the same day. I placed it the strike at 38.60. So above 38.60 I would have taken losses. Below 38.60 I'm in profit. So that's what these indicate right here. So I hope that explains it. If it doesn't, just let me know. As far as the trades that we're looking at right now, our stochastics is coming into striking distance for me. But again, I just want to see what the market looks like exhaustion, which to me would be if we could not break this next candle, which we just did live. So I'm going to wait until the market stops making new highs, or at least new swing highs right here. I anticipate the market's going to run into some trouble at this pivot point, but we'll see. But this should be a really good trade. Super unlikely, especially in a bear market, that we're going to pull above a R3, but we have to consider, this is something that you have to consider with pivot points. The pivot points might be a little bit squished. You can see that the pivot points are closer together than the previous days, except for maybe this day right here. So if the pivot points are a little bit squished together, that's a factor. That's also why I'm waiting. Like, I like to be above S3, but it's not an absolute thing, right? So if the pivot points are very close together, they don't mean as much. So still waiting for that market exhaustion. Let's get a better look at the pivot points in Thinkorswim. So here's a better look at the pivot points, I think. So I can't see the previous day's pivot point. Well, yeah, I can't see the previous day's pivot points. I could turn them on, but I just don't feel like it. But the pivot points are a little bit closer together. I don't know why it's jumping. The pivot points are a little bit squished together because the previous days haven't been as volatile. So we have to take that into account. So, you know, this could be breached today just because it's closer than it normally is. But the trade that I want to do has changed because I have it up on the screen right now. It was 38.95. Now we've got new information. It'll more than likely be 39.05 or 39.10, something like that. Maybe 39.10 because the market is still rising, but I'm going to see what it looks like when the market calms down or stops rising. I think we paired our recent high right here. Let me go back to trading view because this thing's jumping all over. Yeah, we've paired our high. Haven't made a new high yet, but that could change at any second. So if it makes a new high, I'll continue to wait. If it looks like we're struggling right here and we start to get some red bars when we hit this pivot right here, then I'll make a decision at that point. Our stochastics is getting up into the black. That means I'll be able to follow my rule of the stochastics falling back into the purple before I make my trade. So that makes me happy. So we'll take a look at that as well. But that's what I'm looking at. So I'll just be patient, waiting for this trade to fully develop, and we'll see you later. It is 11:32. I did go ahead and submit that trade at 3,900, but of course I'm me. So I jumped the gun, traded early, be better than me. I'm recording this now because I just want to show you this is actually the best time to place that trade. So I'll show you. I placed the trade probably, I think here, right there, when I saw, man, this thing keeps jumping around. Hold on. Okay, so I placed a trade on this bar right here when I saw a little bit of weakness coming in. I thought at the time that we were going to respect this pivot point. Saw a little bit of weakness, but I did not wait on the stochastics like I said I was going to do. I was just kind of eager to get in above this third pivot point right here, which I did, but could have gotten a better position. So what ended up happening, because I didn't wait for confirmation that this trend was going to be broken, this is not confirmation. This is like jumping the gun. So the market sometimes wiggles around a little bit before it continues on. And this is not confirmation. What confirmation would have been is if this bar broke below this bar. So if we got a lower bar than this, if you think of a line, actually I can just draw a line. If you think of a line going kind of like this right here, you want to wait for a bar like this to kind of really crack through this trend line right here before you trade on top of it. And I didn't do that. So I'm kind of out of position. I mean, I'm fine, but it would have been better if I waited for maybe this bar right here, or even better, you know, getting kind of, this is kind of sideways, but even better if we start getting into the 38.62s from here, even better. But this is okay to trade these bars right here. We could still continue up from here, which we might do, but even better if you just wait for the stochastics to cross back into the purple, you wait for a lower low or a lower high on the bars, even better, then place that call spread up here. I could have gotten 15 points higher as far as safety is concerned. So I could have been up maybe 39.15, maybe even 39.20, probably not 39.20, probably 39.15, 39.10. Could have got a little bit more cushion on my trade with that if I just waited. So just wanted to show you that, learn from me. This trade's probably going to be fine, but should have waited. But you know, shoulda, woulda, coulda, whatever, you make your best decision that you can. But we also learn from those decisions so that we can do better next time. So just wanted to show you guys that real quick. We'll check back in. Back, and it is after market close, January 6th, and here's what we're looking at. So honestly, I feel kind of bad. I'm not even gonna lie. I knew I shouldn't have traded as early as I did when I even traded it. I said it earlier, and look, I got breached. I got breached right there. But I didn't get out of the trade. I did not get out of the trade. And one thing about this style of trading is you got to put a lot of safety features embedded into your trading. And one of my safety features is trading small. The reason why I trade small is so I don't panic. So I saw the train coming and I said, I'm going to probably look at getting out or adjusting when it gets to 38.80, 20 points away from my position. That's pretty much my standard, right? And it touched it and it backed away. And then I got busy with work, whatever. And by the time I got back to trading, we're here. We're already, testing R3 right here. We're already popping up here. And by that point, I'm just like, you know what? I could probably still roll, which I could have. The roll that I saw was actually to Tuesday, where I could roll to just about even or maybe pay 10 cents or whatever to roll. But I would only be gaining, I think it was like 20 points, maybe 15 points at the time or something like that. So I would have rolled from 3,900 to like 3,920 for 2 days. And I just didn't want to do that. And also we've got Jerome Powell coming up next Tuesday as well. He's speaking in the morning before the market even opens. And I'm just, I don't want to do that. I don't want to torture myself. I don't want to lose a day of trading. I don't want to do all of that. The market is well above the stochastics and everything like that. So it could drop back towards the end of the day, whatever. At this point, I'm just going to roll the dice because I missed my chance to, close out or roll or do my decision right here because I got busy, And, I watched it pop right on through, bloop. And I just said, you know what? It's up to the gods now. It could pull back or it could keep going. It's a coin flip at this point. So this is not a trade I feel good about, but this is life, man. This is life. This is why I trade small, because imagine if I had like, I don't know, $10,000 or something riding on this trade. $10,000. I mean, you would have looked, by the time I looked at this, when the market was right here, I would have been down probably about $7,000. I'll even say 5,000. We'll say half, whatever. And you're gonna look at that half, and it's already gone. So, I mean, your heart's gonna be pumping. You're gonna have a lump in your throat. You're gonna be sweating, stressing out, all that kind of stuff. And if you're doing that, you're trading too big. Because what I did when I looked at this, even though it's simulated trading, I know it's simulated trading, and that's not why I've traded with real money. But when I look at something like this, it's just dims the brakes. Oh well, we'll come back again. It only took me a week to build this up, so we'll build it up again. Whatever. Let's go ahead and roll the dice. Let's go to Vegas. If that's where we are, that's where we are. You should have that kind of nonchalance towards your trading. If not, you're trading too big. Don't be like me, be better than me. What I should have done, instead of trading on this bar right here, I should have waited for confirmation. If I did wait for confirmation would have looked like this bar right here. Trading on this bar would have got me an additional 15 points, and I would have been at 39.15. I would have been, kind of looking at the market side-eyed or something like that, but I would have been fine. And I think I said earlier that extra 15 points, even if I would have waited a little longer over here, would have made all the difference in the world. But I didn't wait for confirmation. I saw this and anticipated ahead of what the market actually showed that we're going to get a pause right here because I saw this pivot point and I was like, oh, the market's probably going to bounce underneath this pivot point for a while, yada, yada, yada. I didn't wait for actual confirmation. I even said that I was in a position to wait for the stochastics to curl back into the purple, which it did on this bar, which would have been a fine trade, but I didn't wait for it. I anticipated that it was just going to curl right back down. I anticipated that this right here was going to cause it to bump back down, but it didn't do that. So I should have waited for this bar or not traded. That's what I should have done. Wait for this confirmation, this trend break right here, because this kind of broke. This is now a lower low, lower highs, lower low ish. And the stochastics coming back into range. That's the spot to trade, not this. Bad, right? And I'm really kind of talking to myself, right? Really smacking myself around because I know better than this, but I did it anyway. And I always do this. So I'm kind of yelling at myself publicly so that you guys don't do this. But anyway, we won the trade. I did put in a put trade, but I didn't really want to broadcast it like that. Just because I'm actually relying for this particular trade off of a bot that another trader built, and I'm kind of testing that out to see kind of how accurate it is. So I didn't really want to. This trade wasn't based on any of my normal rules or anything like that for this put, and I knew that, so I didn't really want to broadcast it like that. But this trade should have been, and it wasn't. And I paid the price. I didn't really pay the price for it, but I easily could have paid the price for it. Now, what could I have done to save this trade if I wanted to, if it was going to keep going up and up and up? The only thing you could really do, it's a tough call. Once you get in the money, I mean, your options are super, super limited. You really don't have good options unless you have capital. And see, I don't have capital to play with. If you have capital, then you can add contracts to your trade. You can widen your strikes. You can do a combination of both and get further away from the market because you're throwing more money at your roll. You're throwing more money at the trade to compensate for the L that you're already taking. You're going to take this L. You're taking that L. But if you have more money, you can compensate for that L and mitigate that L. You can, if you really think the market is going to keep going up and up and up, which you don't know. I mean, obviously you can move up your put to bring in more cash to compensate for this L. You can sell a put against the market. Again, you can expand your strikes and roll. You can just roll immediately down on the same day if you have more capital to throw at it. You can close your short strike and leave your long call strike to soak up the market going up, which would not have worked in this case. So it's kind of dangerous to do that as well. I mean, you can get out of trouble essentially and turn this bad situation to a salvage situation. You can salvage it if you have capital. But without capital, I mean, it's just like shrug. You're just praying at that point. And I hate being in a position of just smoking hopium, is what I call it. Right? And that's all I could do. And, I guess the prayers worked that time. But again, my last line of defense is just trading small. Just trading small to keep the losses small. And that's that, right? Live to fight another day because I still have capital, but that's all I got to work with. So it just so happened to work out. So, all right, I'm done beating myself up. This is what the day looked like. I'm kind of annoyed with the market a little bit because the same news that we got yesterday with the payroll and everything is the same news that we got today. And look what the market did yesterday. Payroll down, payroll up. It's the same news. So we're in this weird situation where good news can be bad news, because good news for the economy means that the Fed is going to think inflation, therefore hike rates, or not. I really don't know. It's just whatever. So there you go. That's the day. Here's where we ended up. 780. Oh, another thing I wanted to say. If you are in that situation where you need to roll and you're in an iron condor and you don't have excess capital, then you're going to have to close out your other spread, the opposite spread that's not in trouble. You're gonna have to close that out before you can roll, because you have to use that capital that you're using on your bad trade. You have to recycle that capital, and you can't do that if you're locked in on the other side of the trade. So you have to watch out for that, and you can get really stuck, because if your other side of the trade, if it's at zero and there's no bids to close out your spread, then you're stuck. Because what you'll find is you'll put in an order, a zero order or a 0.05 order, 5-cent order, to close it out, to buy back your spread, and nobody's going to pick it up. Nobody's going to pick it up. And then you're stuck like Chuck. You can't do anything. So you have to watch out for that. You have to make sure, if you think that you're going to have to roll, you have to close out the other side of your trade early, before you do anything with rolling or adjusting or anything like that, if you don't have excess capital to support more contracts. That's something that I found out the hard way a long time ago. Okay. All right, guys, I've got another video I'm going to try to get to you guys regarding what's it called, risk reward ratio and versus win ratio and everything like that. And this is an interesting day to kind of juxtapose against that video when I get it out. It's too long right now, so I gotta figure a way to chop it up and so I can upload it, but or I might redo it, I don't know, but I'm working on that for you guys. If you want me to talk about anything else, let me know. Happy to oblige, and thank you to my new subscribers. I really appreciate you watching me. I'll be as honest and upfront with you guys as I can, win, lose, or draw. And thank you. I really appreciate it. And I don't have all the answers, but I've got a lot of them. And this stuff works. We just have to refine it, have to, mitigate the Achilles heels that we find and perfect it. So there we go. That's it. Hope you have a good weekend. We'll see you next week. Peace.